What's up, everyone? Thank you so much for joining us at Investing City. Our hope is that we can become better stock market investors together so that you can make tomorrow better than today. If you haven't checked out our website already, please do so at www.investingcity.org. And without further ado, let's just hop right in. So today we're going to be looking at how to research companies to decide if they're worthwhile investments. But you might ask, haven't we been doing that the whole time? And yes, but the last few videos have been just building the building blocks so that you can have these tools to really look into companies that you know nothing about to decide if you want to put your hard-earned money into them. And so we're just going to look at a company. Actually, if you watched the last video, how to screen for stocks, we came up with a list of 4 stocks. One of them was a sketchy Chinese biotech. The others, 2 of them I knew, and so the third and the final one was one that I didn't know, so we're just going to look at it together from scratch. This might be a longer video because I have no idea how this will end up, but we're just going to look at the company that was on the last list of the screen, and so that was Slp Simulations. And so if you know nothing about it, it's a good idea to start at the 10K. And so we'll look over simulations plus. So it says science plus software equals success. So that's interesting. So let's try to look for the last annual report. It's also a good idea sometimes to just check out the website. Might give you a little bit more insight into what the company actually does. So I prefer the PDF version. We'll just pull that up. As you saw in the last video, we will go to the business section, and that is a fake hyperlink. So that's honestly something I look for too sometimes. If the company hasn't put enough thought into their hyperlinks in their 10K, or they don't have the table of contents set up, that might show a little bit of a lack of a professionalism. But anyway, that's a tangent. Simulations Plus started in 1996. They're premier developer of groundbreaking drug discovery and development software for mechanistic modeling and simulation for machine learning-based predictions. So that's a good amount of buzzwords that can either be a good or a bad thing, depending on how you look at it, I guess. So they're just talking down here about how they have some mergers and acquisitions. So these are companies that they've acquired. And so it's interesting, software company that helps pharmaceutical and biotech companies with their modeling for how their drugs are going to react, I guess. So it's interesting. So we see down here the flagship product. Currently our largest single source of revenue is Gastro Plus. So it simulates the absorption, that big word, and another big word, of drugs administered to humans and animals. Currently the most widely used commercial software by its type by pharmaceutical companies, FDA, NIH. So that's interesting. It's kind of like a software that helps with drug development. Very interesting. So we'll move down. These are some other drugs, I guess, or some other drugs that they can model. Wow. So yeah, that's just a rough rundown of what they do. So now we come to the risk factors, and as we've said before, these are very important unless they're very general. And so sustain depending on new markets, okay, consolidation, increasing competition, okay. So now we come down here, face strong competition in the life science market. You would think this is kind of an esoteric market and maybe they wouldn't have much competition. So that's something that's interesting, that they do have a lot of competition even in this strange market that not many people have heard of. And then coming down here, subject to pricing power. And so Warren Buffett, he actually said the most important thing that you need to look for in a business is pricing power. Because if you think about it, well, he actually said if your business needs to have a prayer meeting before raising prices, then you've got a bad business. And that's pretty true, because if you don't have any pricing power, And you can't, because if you think about it, Amazon, if they raise the prices on Prime or Netflix raise their prices, I'm sure people would keep using it because they're getting a good value out of it. That's what it's about, value. And so if your company can't raise prices, that shows maybe the value proposition isn't quite there for your customers, or they have other options that are better. And so that's a really fundamental thing in investing. So they're subject to pricing power, and they lay that out in their risk factors. So that's something that we're going to have to keep in mind and look at throughout. And so let's move down to the financials. I think that those hyperlinks don't work, so I might just have to scroll, unfortunately. And so let's find the financial statements. As we look here, we want to just see, okay, revenues are growing. That's about 20% revenue growth, which is pretty solid. The company is making money, net income positive, so about 30% operating margins based on the revenues. That's really high. But the thing about looking at the financials is that it's all about trends. It's all about your trends, because if the company has been doing really well in the past, look at this 84% gross margin. It doesn't matter. The past doesn't matter, because all the market is doing is looking towards the future. That's what investing is about, looking towards the future. And if this is 84%, this is nowhere near 84%. I bet that's about low 70s. And so the trends, for some reason, are going down. You see this is 40% operating margin, this is 30%. So if you look at it in isolation, these are great numbers, but if you look at the trends, it's actually not doing too hot. And if you look down here, this is interesting, the dividends. So they're paying out basically more than half of their income in dividends, and this is for a company in the software industry in biotech, supposed to be really capitalizing on machine learning and all these trends, but they're paying back half their money in dividends, meaning all that money is not going back into the business. So that's either because they're paying executives crazy special dividends, or they don't have enough business opportunities to put back money into. And they've been doing this. They've paid more than their net income in 2013. So I don't really understand why the dividend. So that's something that's kind of interesting. That might be a sign of their intense competition, or it might be a sign of a small market, actually, that they don't have even the business opportunities to expand or whatnot. So just like in the risk factors that we saw, their market opportunity might not be there, and that's something that's dangerous as investors, because we want these companies to have big growth runways where we can really grow with the companies. And so let's move down to the management discussion and analysis. These are just some highlights. This said that the gross margin increased, which, as we saw, that's not actually true. So I don't know where they got that number. These are 2017. As we said, this is 77% gross margin. This is 74, so that debunked whatever they just said. These are some tax adjustments, so that's why the net income looks like it is the same. But yeah, operating margin is decreasing. If you want to learn more about that, I suggest really diving into this, because anytime something doesn't make sense, there's always a reason for it, and it's just your job to find out what that is. Be a detective. That's what investing is about, being a detective and just figuring out where things are a little bit iffy, where things just don't line up. And so as we saw, the pricing power, so the gross margins are deteriorating. And the thing about investing, like we say every time, investing, you have an opportunity cost on your time as well. So let's look at, if we want to learn more about just the latest, let's head over to the earnings call, and maybe we'll find something out that helps us a little bit more. But as we saw, they have a little bit of trouble with pricing power. The market might not be as big, and so it looks like there's no there's no analysts that are even following this company. That might be a good thing, because sometimes when there's a lot of analysts, there's less room for investors to create alpha or beating the market, because there's so many analysts. They can really just look at all the little things in the company. But if there's a company with no analysts covering it, that's sometimes a good place to look. But let's look at these. These are some more of the metrics. So renewal rates are 89%, which is not super good if you've looked at a lot of other software companies. So this is 85%. That's not great. But we see the revenues increased 29%. We can go back and see how that relates to the past years, because it's all about the trends, remember? And they're just breaking down all these segments of their company. And right now, I'm just not super sure about Simulations Plus, because we talked about you have to be comfortable with the edge of the company. If you're in the medical field, or you even work for Simulations Plus, you're definitely going to understand it so much better than me or somebody else is. So that's really should be a determining factor in the companies that you decide to invest in. You have to know why you're buying into a company, because if you're just buying into the company because somebody told you on the street or your friend told you to buy a stock, then you're not going to know why you're investing. And if the story changes, you're not going to know when to get out. And if something that looks bad but is not really that bad, you're not going to know when to stay in. So you have to know why you're investing in these companies. And right now, I just don't know this company super well, and the metrics don't stand out to me. And so that means that, just like I say every time, time has an opportunity cost as well. Every minute you spend looking at Simulations Plus, you can't spend even with your family or something like that, but you can't spend looking at stocks that you know better or that you think have an opportunity to grow or increase in value even more. And so with that, I'm out. I sound like Mark Cuban from the Shark Tank or something, but that's the thing about it. You have to look at these things in context of their businesses and in context with your edge. And so right now, I just don't really feel like I have an edge with this company, and I have to do a ton more research, and I don't feel like it's worth it in terms of the market and in terms of pricing power. And so with that, I thank you so much for checking out Investing City. I hope you learned a thing or two, and I hope that you become a better investor from today's video. So thank you so much. Have a wonderful day.